Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Another big week for your money. The Fed meeting along with Oracle and Broadcom earnings. That's big. We're discussing debate with the investment committee what all of it means to these markets. Joining me for the hour, Joe Terranova, Bryn Talkington, Shannon Sakosha, and Amy Raskin. We will check the markets at the beginning of this very important week. We do have a very mixed picture. So we're going to get the Fed decision. Bryn, nice to have you in the house on Wednesday. Oracle and Broadcom are important, as we said. Tony Pasquarello, Goldman Sachs, keeps his responsibly bullish stance, says, looking forward, my baseline view is net positive. Why? The Fed's increasing liquidity into an upswing in growth. The flow of capital is supportive, and that's the core of my simple calculus. Other calculus today, Oppenheimer, 8,100 on the S&P. Next year, 7,500 for UBS. How are you feeling ahead of this pretty important week? Yeah. Important enough that it brought you to town.
It was. I liked how Professor Siegel said on Closing Bell on Friday, a hawkish cut. I think that makes sense, right? Because you're going to have Mirren, Waller. I think ultimately Jay Powell is going to cut 25 basis points. But I think this really sets us up for 2026 that we have QT ending, so we have more of an accommodative Fed. We're getting rate cuts, helps the short end. We also have the fiscal impulse from the OBBB, which goes into effect. And I think that tax refunds are going to be above average. And so I think and earnings, don't forget earnings, are all in place. So I think we're setting up for a good backdrop, albeit I think it's probably going to be pretty choppy.
Joe, rates are already moving up, right? The long end's been moving up. You got the 10-year at 417. What does that mean for the market?
It means that as the calendar turns into 2026, it's something that you're definitely watching for. Right now, 84% of global central banks, their last policy action was a rate cut. You do not want to see that figure fall below 50%. That's when historically markets get into trouble. We know what's going on in Japan. We heard from the ECB over the weekend that they are potentially ending their rate cutting cycle.
Is that the biggest wild card right now?
I think it is, Scott. I think it is.
In the long end?
I do, and I think what's going to be important from the Fed meeting today is, and I understand Kevin Hassett doesn't want to look into the next 6 months to see where policy might be, but I think the trading community wants an understanding when the rate cutting cycle ultimately is going to end. Is it going to be 2 cuts in 26?
Yeah.
Is it going to be no cuts in 26? Or are we going to be cutting 1 year from today, which means we have a bigger problem in the market?
Within the last hour, FedWatch has come out and said, quote, given the economy is showing signs of strengthening, yields may retest the 425 area. There's the idea of a hawkish cut sending rates higher. I mean, it's pretty obvious. But the counterintuitive play is one that Michael Hartnett, Bank of America, was talking about last week, that a dovish cut could also do the same thing because it could stoke inflation fears. It is interesting today that you do have the New York Fed 1, 3, and 5-year inflation expectations were unchanged. You're going to get a forecast, too, which is even more important because, as Steve Leisman is going to tell us right now, you're going to get a forecast, Steve, based on data that the Fed hasn't gotten because of the government shutdown, to which, for the first time, I think I heard you suggest maybe we shouldn't even have a meeting. You did that on social media.
Yeah, I've said that a couple weeks ago, Scott, when I realized that the data was going to be as late as it's going to be. There's my blue sky tweet, I guess you call it. And there's 2 reasons, Scott. One is that the Fed is making the current decision with the delayed, without the data. But it's also putting those forecasts together. And maybe what people don't understand is that when you put a forecast together, a good chunk of what you think is going to happen is based upon what you think happened or what the prior data say. So I don't understand these models that are going to spit out the Fed's forecast for unemployment, CPI, and growth. It strikes me they're going to be kind of worthless, and the market's going to have to really take a key part of the Fed's forward guidance, which does come in these forecasts, with a huge grain of salt. And that's going to stick around, by the way, Scott, until March. It's not until March they come out with another set of data. So all of this strikes me that if the Fed is data dependent, I don't see what it would have hurt them to wait a week. If you look at what comes out next week, the jobs numbers come out and inflation data come out. And it's not just 1 month's worth of data. It's 2 months worth of data because you get October and November payrolls. No October unemployment. You'll get retail sales and you'll get a November CPI. So I think I'm just a lone voice on this issue. I don't hear a lot of people calling for this, but I don't know, maybe a couple late change fees for their airline tickets it would have cost them, but I don't think it would have cost them much to wait.
It is funny, and I couldn't help but chuckle for a moment when you talked about the idea of the outlook being, quote, worthless. And that we should all take it with a grain of salt, as some suggest every time you should take it with a grain of salt. And every time it's a little bit worthless because they have proven to be a little bit of that as the Fed tries to guess where things are going. But if I told you that according to the New York Fed inflation expectations 1, 3, and 5, that they're unchanged and that the labor market outlook has improved, I would say, okay, that's a pretty comfortable environment to cut.
Well, I'd say two things to that. One is that inflation expectations are unchanged at a higher level, right? Those 3% numbers are not what the Fed is looking for. They're a bit elevated from where they were before the pandemic. And I do not think it costs the Fed a whole lot to cut here. If it ends up being wrong, I think it doesn't want to be wrong in not having cut, right? It doesn't want this data, employment data, to come out super weak and say, well, we should have cut the prior week if it waited. I do think, though, there's some talk out there that the economy is accelerating already, and you have not brought inflation down. There's a bunch of people on the committee that think, hey, this is an issue, that for 4 years going on 5 years, we're going to be above 2%. We're going to be closer to 3%. And that's something the Fed ought to be concerned about. We'll have more of this tomorrow, Scott, in the Fed survey, where I will tell you ahead of time here that the concern about inflation is now the #1 risk to the expansion.
From 399 on the day that the Hassett name was first put out there in that report to 418 today. Why do you think rates have backed up?
Well, Scott, there's always a lot of things going on in the bond market. There's inflation expectations, there's term premium, there's stuff happening overseas. But I will tell you that among the commentary that I've read, there are those who are saying it is the Hassett pick that is the matter of concern here, that you're going to have a Fed chair that is going to be more beholden to the president's wishes for lower rates than perhaps the dynamic of inflation and unemployment. So that is a concern out there for the market. It's a concern that the market ought to, in a normal course of business, exact some compensation for. If indeed it's going to be a chair who is not going to be as concerned about inflation, every chair comes along, every new chair comes along and has to prove his or her bona fides to the market, Scott, about inflation, that they're willing to risk recession in order to stop inflation. And I think that this, if it's going to be Hassett, this Fed chair would come in having more to prove than others have in the past.
It's an interesting thought. Steve, thanks. Steve Leisman, our senior economics correspondent. So let's check the box off on the Fed, right? We've covered that. We know what's at stake now. And we'll watch it in the days ahead, obviously, when the decision comes down. The other big deal coming down is Oracle and Broadcom, Wednesday and Thursday. Why? Because there are so many questions about the AI trade. And really, as it relates to Oracle, about the level to which companies are using debt to help fund their AI ambitions. Joe T. Joe has Oracle and Joe has Broadcom.
I do.
Which means Joe has opinion on what's going to happen.
I do. Obviously, I'm a little bit more excited about Broadcom. But in the case of Oracle, let's address that first. The options market is suggesting you have a 9% move there. Actually, in Broadcom, it's interesting. The options market is only saying a 6% move. Oracle has to address the CapEx. They have to go right at what their CapEx intentions are going to be. Are they actually going to do this $35 billion plus private debt deal to add upon the debt that they've been building? I've said over and over again over the last several weeks, if you have not bought Oracle and you're looking for a spot to buy, you use November 21st low at 185. You've got a low risk point of reference. Obviously, Broadcom is where the real opportunity is. Hock Tan in the September call was very confident in talking about how there was a pivot towards the chips that they are currently utilizing and the relationship that they have as the design partner for the tensor processing units from Alphabet. So as this market cap approaches $2 trillion, I think it's going to exceed that over the coming year in 2026. I understand the valuation is a little bit elevated, but the story surrounding the pivot towards other chips and the TPUs from Alphabet, it's represented specifically in my belief in owning Broadcom.
So I think I think with Oracle, it's really important for people to understand. Historically, Oracle's backlog was 80 to 90 billion, and then all of a sudden they came out during the earnings report and said we're going to have what 455 billion. And so right now, OpenAI, a company which doesn't have the goods, is like almost 70% of their future backlog. And so I think investors need to understand what Oracle has to do is, in essence, go build 4 million homes, yet the people that are coming to buy the homes don't have the money yet. And so I think that's going to continue to be an overhang because Oracle has to go build this, and they're not even going to start until 2027 with Stargate.
Well, look at the CDS, right? This is now maybe the earnings call is going to be the most significant moment facing that chart that we've seen since the start of the whole AI thing, right? Because they're going to be asked about it. They're going to have to address the amount of debt that they've been taking on, whether it's too much for too great of an ambition that may not pan out the way that they want you to believe that it will. Maybe it does, maybe it doesn't. But if you see the blowout in the CDS, that's the biggest point of concern with the stock, arguably more so than what the equity has done.
This is a credit concern. The credit investors will be listening to this call to understand what the risks are in other parts of the AI debt market, in what's happening in the private credit market. Scott, we keep talking about this potential contagion. This is what they're going to be watching.
You have Oracle. You have Broadcom.
I have Broadcom.
Also.
Yeah.
Entirely different story.
Yeah, no, entirely different.
They've been trying
story.
to wave their hand the whole time and say, you know, yes, I know Jensen looks great in a leather jacket and all that, but hey, we got our own thing going on over here. Look at us, pay attention to us, and the market's been paying attention.
It's up 70% year to date, 120% over the last year. So it's been a great stock, and I think it's going to have a great quarter. There's no doubt about it. The most interesting thing will be how the market reacts to it. Nvidia had a great quarter. A lot of companies had a great quarter, and the stocks didn't work still. So I think it's going to be, the question is it going to be great enough? Are they going to announce new TPU customers beyond Google? Are they going to be able to talk about them? But I'm not sure we're really going to get answers. I think you're going to get a lot of good talk right now, but it's going to be 2026 and beyond when we actually really find out.
I mean, the information reporting today, Microsoft reportedly in talks to shift custom chips to Broadcom from Marvell. The stock's hitting a new all-time high today.
And that's in addition to Amazon suggesting...
We'll get names. The question is, how big is this really going to be? How big is the AI build-out really going to be? Are you going to get the answer to the Oracle question on the debt? Because you'll get them talking like, we're going to build this, we're confident about it. But I don't know that investors are going to believe it with just words now.
It's been an existing tailwind, but it's now raised the awareness into the headlines that they have this design partner relationship with Alphabet's TPUs. I do think it's going to be critically important that he speaks with confidence once again, and he says, yes, in fact, we are beginning to capture more market share, because if you look at the global market share as it relates to AI chips, Nvidia is nearly 80%, and you're sitting with Broadcom somewhere around 9 or 10%. There's a tremendous amount of growth opportunity as we move forward if you get that pivot. I think that pivot's happening.
But do you have any doubt that he's going to speak with confidence?
Well, he hasn't. He actually hasn't until the last call in September. That was the very first time that he basically said, wait a second, to Scott's point, we're here along with Nvidia.
You're talking about Hawk 10.
Yes. Yeah, and I own the stock. I think it's a great opportunity. The question, but I think the answer we're really going to get further down the road when we see what the CapEx spend really is and whether the companies are still getting rewarded for increasing their CapEx numbers.
Hey, how about this? Ed Yardeni, he's as bullish as anybody on this market has been throughout however period of time you would like to make that mark. Go underweight the Mag 7 versus the S&P, he says today. That's their new recommendation. He talks about the impressive 493. He says we see more competitors coming for the juicy profit margins of the Mag 7. We also expect that the productivity and the profit margins of the impressive 493 will be boosted by the technologies available to do so. How about that call, Shan?
We agree with that call. It was our call in our Solving for 2026 piece that we believe that AI adoption, that we're going to move from enablers to adopters as being critical. And it's not just on productivity enhancement, Scott. It's around enhancing and complementing existing growth profiles for these companies. And so I think, again, we always expected there to be some narrowing of the delta between Mag 7 earnings and the rest of the 493. What you've instead seen, and you said seen them move up in the channel together. And I think that there's going to be enough strength in the 493 to make it worth it.
Wolf today says that they also expect some violent rotations ahead. They use those words. The biggest risk remains a major disappointment / permanent shift in sentiment on AI.
I think that shift is going to be amongst the different companies. So if we're still talking about the Mag 7, I think what's interesting, since December of 2023, the Qs are up 64%, Microsoft's up 24%. And so where did that delta come from? It came from Nvidia, it came from Broadcom, it's come from Google. And so I think you're going to continue to see a dispersion of returns between these Mag 7. And I think realistically, investors don't buy Mag 7 and then buy 493. They buy the IVV or VOO in the Qs, or they buy RSP equal weight. And so I think that across the board, you're not going to see asset allocators go Mag 7 and then just 493.
This is one of the points we've been talking about, the dispersion in returns among the Mag 7. I think Ed Yardeni is referring to that, where it's sort of going to be every company for itself.
Yeah.
So you can no longer look at these things as you're just going to buy the Mag 7 and you're going to play AI. Now you have to be much more selective, and as you get into 2026, maybe even more so.
Yeah, Ed has a really good track record of really good timing. That's all I'll say. He's one of the best in the industry. He has been for a long time, so I agree with him. He also, interestingly, talked about going abroad, which he hasn't talked about for probably 15 years either. So I think this was a big call from him, and one that people should pay attention to.
Want to talk about a little Apple? For a minute, because you've had all of these executive departures, then rumors of yet another one, to which that was refuted by the source himself. Was the chip chief going to leave, as one report suggested? It was out there enough that he came out and said no plans to leave, and that was according to, as you heard, I hope, our Steve Kovac talking about. Here it is. He quashes the exit rumor. Nonetheless, you have had a bunch of executives leave. Bryn, I'll get you on this first. The target goes to 350 today from Dan Ives, who's going to be on closing bell. BTIG says the stock is poised for a pullback. The target gets bumped to 325 at Evercore. How do we feel about this stock right here?
I think the stock is poised for a pullback. I agree with that. The percent it's over, actually it's 50-day moving average, so you could see it pull back just a bit more. I think when I look at these departures, the general counsel and the head of ESG or what have you with those two departures aren't going to move the name. When I think through the big departures, where did they go? Meta and OpenAI. And obviously Johnny Ive is at OpenAI. So in theory, why are these people leaving? They're leaving to create products for consumers to buy. And so OpenAI has been really clear. They want some product that has no screen. And I think where this is very risky business for these other companies is the reality of them, Meta outside of the Ray-Bans, or OpenAI to be able to pull off a new product that we as consumers want to buy, I think has like a 5% probability. And so I think Apple is still in pole position from a consumer product perspective of being able to not have the cap spend, still have great talent. And as long as Tim Cook is there, then I think the market, after Q4, earnings are going to be solid, will continue to move itself higher.
The stock's not that far off its high. I mean,
no,
288.
It's had a great run. It's just had a really...
Was it 277?
Yeah.
277, 288
yeah.
was the high. People have questioned, well, why had the stock even made the move that it had towards the high or hitting that high? All it took was a little bit of optimism around iPhone 17 upgrade cycle. Right?
I'm not sure it's a little bit of optimism. I think there's a lot of optimism.
Well, because we waited so long
for
it.
Right, exactly. And it deserves it. And, you know, and everyone's talking about Apple and AI. I think that's a red herring. I actually think Apple has a good core business. It's priced that it has a good core business. It's expensive for probably its earnings growth, but it's not going away anytime soon.
Let's hit a couple of other things that are of interest to me. Tesla, Bryn, downgraded today at Morgan Stanley. Not Adam Jonas, the person who now covers that stock. The equal weight from overweight. The price target at 425. While it is well understood that Tesla is more than an auto manufacturer, we expect a choppy trading environment for shares over the next 12 months. That doesn't sound so indifferent to what you've been talking about.
First of all, sad to see Adam Jonas leave, because he was obviously a super bull on Tesla and wrote great pieces. I think from this analyst perspective, I think at these levels, the 430, 440, 450, this is like outer Earth orbit. I don't think it's going to get much higher than this until you actually see real breakthroughs. So, I mean, I would be selling calls. I already have calls that expire on the 19th. Otherwise, I would sell calls here.
Okay. Paramount, they go hostile for WBD. What does Netflix do next? You have that stock. How are you thinking about this?
I think this is the beginning of what is going to be a very prolonged, difficult battle going back and forth. Obviously, Paramount wants it all. That's not what Netflix wants. They want Hollywood studios. They want streaming. Let's talk about in terms of what you do with the positions. I have this name personally, and we hold this name in the ETF. I am uncomfortable getting out of Netflix personally as the stock is on the decline because it's still in the ETF. This is different than Apple. I had maintained a position personally in Apple and in the ETF. The stock's going up. Okay, so you're still making money if you own the ETF. If I get out of Netflix now personally while the stock is going down in the ETF, I have a problem with that.
Well,
would I get out of the stock?
Yes, would you get out of it if you could?
Absolutely.
You would?
I absolutely
would. Why? For the same reasons that Josh came on the other day and said he sold 85% of it?
Josh and I talked about this the other night. I think he's correct. This is going to be a very difficult process. There's going to be a lot of friction, a lot of back and forth. It's clear that David Ellison wants this.
So you think it's going to be this stock? That's really all I care about, right? Is this stock for this conversation? You think this is going to be in purgatory for the next, or at least in a holding pattern for the next 18 months?
Yeah, I think there's something about being successful in investing, and that's don't spend a lot of mental capital on something. And you're going to have to spend a lot of mental capital on Netflix now, trying to understand the varying dynamics as this unfolds over the coming year. Yes, you could call it it's going to be in purgatory,
or whatever.
However you want to define
what he was talking about.
However you want to define it, but it is going to now have the introduction of a variety of different dynamics that shouldn't exist for Netflix.
Okay.
It should just be about the growth of the business, new areas of expansion, and the ability to increase subscribers.
Right. Financials have been crushing it, Goldman Sachs included. Target to 900 today at Bank of America reiterates the buy. Amy, take that. So 870 is the high. It's not that far off of that at all.
Yeah, no, I trimmed Goldman and JP Morgan a couple months ago after the quarter was great and the stock didn't really move that much. It's been a rocket ship. It's a great stock. I think the capital markets environment is good, but I think that's getting fully discounted. We'll get a steeper yield curve, or at least I think we'll get a steeper yield curve, which will help financials. But again, it's had a big move, and there's a lot of optimism in the stock already.
Okay. Yeah. Lastly, strategy. Bring it up because the target gets cut today to 450 from 600 at Bernstein. They reiterate their outperform. Joe owns it. He's talked about it a lot. You own it in the ETF. You can't do anything, so it is what it is. Bryn, you don't own it, but you probably have the most Bitcoin-related or crypto exposure on the show. So crypto's been a mess. Obviously, Bitcoin's been a mess. Today, it's fractionally higher.
If we get, I think Japan and crypto are related. Yields, yen, are all related to crypto because that's been a carry trade forever. That unwind creates pressure. I also think the Fed stopping QT is going to be positive. I think MicroStrategy has a complicated balance sheet, and so I've never owned it. I think BMNR from a Ethereum treasury, they have a clean balance sheet. Obviously, they're issuing shares, but they're not doing preferreds or converts. And so I think that this is an opportunity. I bought more Ethereum last week. I just think, especially with Ethereum, which is down quite a bit off its highs, this is when you add to these positions, right? You're supposed to buy low, sell high, but most people feel comfortable buying crypto at the all-time highs, not when there's actually an event occurring. Whether MSCI fleshes out, I have no idea.
You're telling people to buy strategy?
No, Ethereum. I was like, I don't understand. MicroStrategy's balance sheet is way too complicated for me to parse through. I've decided to play it with Ethereum and iBet.
Okay,
I didn't go to you on it because I didn't know what else there is to say on it.
No, I mean, what else is there to say? Let me give you something else. There's 15 buys on the stock. There's 3 holds. There's 1 sell. The 12-month price target for this stock that trades 182 right now is $473. That's ridiculous.
All right. Up next. What else do you say? Up next, big changes at Berkshire ahead of Warren Buffett's retirement. We'll get shareholder reaction coming up. Plus, we will debate some calls of the day. We're back after this break. All right, we're back. We have some big news out of Berkshire Hathaway today. Todd Combs, the investment lieutenant to Mr. Buffett, is leaving for J.P. Morgan. It's notable just simply because of the point in time we are with Berkshire, but also because that stock, Amy, has underperformed.
Yep.
The S&P. People are trying to think about what the future is going to look like. Greg Abel's going to run the company. How should we think about Combs? Do you have an opinion on this as a shareholder?
I don't. I mean, not specifically on Combs. I think Berkshire has a very deep bench. I'm not worried about the management there, and I think Greg's going to do a phenomenal job and has been doing a great job. And Berkshire's underperformed in part because it's not a momentum stock. It's a low beta. It's viewed more defensively. I view it as a more defensive holding. I think when I trimmed Goldman a couple months ago, I talked about adding to Berkshire. So I think Berkshire's the stock you want to own if things start to go south. That's when it shines. It doesn't do particularly well usually in a very sort of momentum market like we've had.
Well, I mean, let's be honest. So if you look at, you have it too. Let's just call it like it is. I mean, if you have been lightening up in some positions that have done well, right? Like Bank of America, for example, they're much lighter today in Apple than they had ever been, right? To where the size of the position once was. Not that Apple has gone crazy this year, but it's 11%.
Yeah.
Take that. Bank of America's had a pretty good year. There are some other places as well. You want to weigh in on that?
Yeah, I think. Well,
perspective?
first of all, I think it hurts to lose another strong investment mind there at a time where I think it's incredibly valuable. They have benefited over the last several years from exposure to insurance companies. Insurance companies in 2025 have not performed well.
Right.
They have really been an albatross around the financial sector itself. In addition, whether it's rails or energy, okay, Berkshire needs those real economy type stocks to begin to appreciate and to almost outperform technology itself. The stock year to date is up 8%. It is identified as a quote unquote momentum stock. It is owned in several momentum funds, and that's because it's living off the prior 12 months, which is what most momentum funds, ours included, will do. So we're looking back, we're seeing that really strong appreciation coming into Q1. That's what we're seeing. It's waning right now, and the fact that the stock is down 2.25%, it's warranted, and it's troubling, it's problematic, and it's quickly deteriorating in terms of thinking about it as a momentum stock.
Yeah, I mean, the market's just going to have to get its arms around Berkshire Hathaway after Warren Buffett.
Right.
It's no more complicated than that. I mean, but it's a very
how does one do
big,
that?
I don't know.
Well, is there a philosophical change in the way that they look at investing? Are they more open-minded to some areas of the market correlating to AI that have performed so well? Because there seems to have been a hesitancy to move in that direction over the last couple of years.
Yeah, but aren't they an alphabet now?
They
are,
absolutely
yeah.
are.
And then everybody says, well, we don't know if Warren bought it. Like, that's the problem with the stock. Is like he's always getting second guessed. And so when the next crisis comes,
people have been saying that though now for years.
Yeah.
Like, because they've had these
Yeah.
lieutenants there.
Yeah.
Well, was it him or was it the other people?
Right.
It doesn't really make a difference, right? They're all talking.
Yeah.
They all talk to each other, right? I mean,
right. Well, I guess. But what I'm saying is that we've had for 5 decades, you've had Buffett and Munger, right, at the helm. So Buffett's retiring. And so I think when the next crisis comes, is someone's going to say, well, what does Greg think? No. And so I just think you have this seminal event that's happening.
Until he potentially steps up with his balance sheet, as Berkshire did after the crash in 2007, 2008.
Right.
And that's when Berkshire really shines, is when you have somebody who wants capital and they want Berkshire's capital because Berkshire's capital means something more than other people's capital.
And in the last 18 months, I don't believe they have bought back any of their shares, which is
They
inconsistent.
haven't. Yes, no, but because they know their stock went up a lot, and now then it's like sort of stabilized and flatlined for a while, which it does. So
let's hit a couple of calls. Uber, the target gets cut by $5 at Morgan Stanley. Joe, you have this both in the T and personally.
I do.
And the target also, I should say, got raised at Loop by $5. So it went from 115 to 110 at Morgan Stanley. It goes to 115 from 110 at Loop.
It's kind of in this range between 80 and 100. I think you said you sold out of some of it.
In 95.
Right.
Yep.
Good sale. It looks like it's pushing back towards the upper end of the range. I think you kind of just have to sit and wait with this stock as we move through 2026. $80 is a really critical swing area. That was previous resistance. We went down and tested it in November, and we held, and that's why you're getting this little bit of a rebound right now. So I think it's more of a 2026 story, and you just have to bide your time patiently.
Give me something real quick on Carvana. I bring it up because it's being added to the S&P. The target goes to 455 from 385 at Bank of America. What do you think? I would venture to guess that a few years ago, if you would have told somebody that Carvana was going to be added to the S&P, as the short interest in that name was like, I feel like it was among the largest on the street, or certainly in the ball game, and now they're being added to the S&P 500.
Yeah, so in 2022 we were talking about debt defaults and potential bankruptcy.
Yeah, back this up, guys. Longer. I want to see. I don't know. Let's look at like a 3-year maybe.
So
I'm not sure if that's going to do the job.
It was a very difficult environment in 2022. And look, I'm going to be candid. I was wrong when we.
Let's do a 5-year. Go ahead, George.
When we purchased this on Halloween, and it went into the ETF, I greeted it with skepticism. I spoke about it on air with you, and I said to you, wow, it really has to prove itself. It's up 43% since we made the purchase. Now, a lot of the reasons behind is the profitability. It is a company that is gathering significant market share. They have the relationship with Ally. They're now diversifying that where they're less reliant on that overall. And the argument has always been, okay, the macro environment is going to be the challenges. Rates are going to be the challenges for this company. But I think they're executing. And I think there's something about the company that actual specific execution is the reason why you're seeing the appreciation and the revenue growth. And now, congratulations to them, the inclusion in the S&P.
That has to be one of the best looking stock turnaround stories that we could think about in recent history. For certain, where in the depths of late 22 to 23 to getting into the S&P 500 at the precipice of 26, that's something. Stephanie Link, Michael Bappas, Dan Ives, Jeff DeGraff. So we'll round it out that way in just a couple hours' time. Amy, final trade for you today is what?
I'm going to use Ascendis, which I just talked about, biotech.
Okay, thank you. Shannon Sakosha.
Consumer discretionary is starting to feel a bit more optimistic given the growth expectations for next year.
All right. Bryn Talkington.
GPIQ sells calls against the NASDAQ, 10.5% bogey, but only 30 to 50% covered, some more upside.
Joe T.
Semi-equipment name, Monolithic Power Systems, MPWR. A lot of the semi-equipment names under the radar, like Teradyne, performing well. This is a name that's up well over 60% in the last year.
Why is it up 3.5% today?
It is bouncing along with some other semi-equipment names, and it's more technical than anything else, Scott.
Well, we did say earlier that the SOX, right, the semiconductor index, was at a record high.
Significant outperformance when you measure semis versus software.
Okay, good stuff. We'll see you in the bell. All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with a major development in the AI story. A report that the government will soon let Nvidia sell its more powerful GPUs to China. A change of heart that has Nvidia shares jumping off the best levels, but nonetheless in the green today. We'll have the very latest coming up along with super analyst Dan Ives right here at Post 9 to tell us about the significance of that development. Let's show you the scorecard here. With 60 to go in regulation, still a down day as a very pivotal week kicks off. The Fed decision on Wednesday. BlackRock's Rick Reeder joining me in just a little bit on that big story as well. We'll also get earnings from Oracle and Broadcom in the days ahead. We're looking forward to that. Chips in general, by the way, have been surging lately. The SOX hitting a new all-time high. And elsewhere, Paramount going hostile for Warner Brothers Discovery. Netflix shares falling on that news. We'll continue to follow that. We expect more developments, of course. It takes us to our talk of the tape, the AI arms race and this developing story around NVIDIA. Christina Partsinevelos joining us now with the very latest. Christina?
Scott, I can confirm the U.S. Commerce Department has given NVIDIA the green light to sell its H200 chips to China, although NVIDIA right now is not commenting. Shares were up about 2.5%, like you pointed to, but only up 1% now. And that's because investors are cautious about just celebrating too early. This is seen as a compromise. And I say compromise because now the U.S. government is offering chips from 2023 rather than newer Blackwell technology. Both Nvidia, keep in mind, and AMD also agreed to pay a 15% fee on China sales back in August, though it's still very unclear if that's actually been implemented. But Washington's approval is only half the battle. Chinese media is calling this desperation, arguing the U.S. is easing restrictions because Nvidia is losing its foothold as domestic alternatives surge. They're labeling the H200 a, quote, sugar-coated bullet with the same backdoor security concerns that led China to shun the H20 chip. China has been pouring billions of dollars into their domestic market. Bernstein, just in a note on December 4th, expects China's local AI chip supply to grow 5 times larger by 2028. So Washington may have said yes, but China could still say no. And that's the real test for whether this actually translates into revenue, Scott.
All right, that's well laid out for us. Christina, thank you. Christina Partsinevelos for more. We are joined now by Wedbush star analyst Dan Ives. It's good to have you here.
Great to be here.
How significant is this?
It's a watershed moment if it plays out, and I believe it will. Look, I mean, our whole view is you don't want to give Huawei and China Tech more power. But by taking Nvidia out of that market, that's what they've done. And with that, you're talking about what could be 15, 20 billion a year. And I think this shows, and we've seen it being in DC a bunch the last few months. I mean, you're seeing changing winds there. I mean, there's a recognition that you have to give Nvidia that market. You have to let that open because otherwise, China tech gets an advantage. And for the first time in 30 years, U.S. tech is ahead of China.
Well, first of all, you call it a watershed moment. The stock's up 1%. I mean, really? Watershed? Yeah. Stock's up 1%. If it was such a watershed moment, wouldn't the stock be up more than 1%?
No, I mean, look, I view it as we go into the coming weeks, we're going to look at this as more and more China opens up. Even as Trump's going to do the visit there in April, I think this is more the tea leaves because I view it, this is just the start of what's going to be an opening of that relationship. And I expect more and more. NVIDIA is going to be able to sell into that market. And that's not baked in. I mean, if you start to think about from a street perspective, the view is China very, very cautious. I'd say negative in terms of what that's going to ultimately be. I'd say the street's underreacting to what I believe is really going to be an opening up of what's going to be a golden opportunity for NVIDIA.
Christina laid it out, though. It's China could very well be like, thanks, but no thanks. I mean, the market seems like it's not willing to take a big leap forward because there are many things that are still at play. Yeah, not to mention the fact that these are, already like 18-month-old outdated chips from the highest quality ones that NVIDIA produces anyway.
And still, I think 1 to 2 years ahead of where Huawei is. So in my view, just being in Asia for 3 weeks, you go to any China big tech company, whatever they say publicly, at the end of the day, they want NVIDIA chips. There's only one chip fueling the AI revolution. I think this just signifies cool relations, and I think obviously a lot more positive between U.S. and China. That's bullish for big tech. It's bullish for you. It's bullish for AMD and others.
Okay, so let me ask you this. Would you admit that we have started to see some dispersion among the hyperscalers and among the mega caps on how the stocks are trading and how each one individually is now being viewed rather than a monolith? Would you admit that?
Yeah,
okay.
and I definitely.
Okay, so you would. So I'm wondering, at some point, can you have an outperform on an Apple, on an Amazon, on a Meta, on a Microsoft, and on an Alphabet? You're judging all of them equal when telling me that this dispersion that we've witnessed is legit, it's real, and it may continue to be the case. How would you come back with that?
Sure. What I'd say is that when it's the 6th, 7th inning of this AI revolution, then you're going to have to separate out, and there's going to be clear winners and losers. Where we are today, I said it's top of the third, one out relative to this AI game. And when I look at the consumer AI revolution, it speaks to our Apple in terms of increased price tag, hasn't even started. So when I look at where Meta and what we see with Alphabet, what we see with Apple, I think that's just starting. Now, I think you will see the market ultimately, just like Microsoft right now and Oracle, almost putting in the penalty box. But I think that's the wrong way to view that. And I think you could pound the table or be much more bullish on certain mega caps versus others. And that's how we've tried to sort of characterize, what are the sort of the A, the B, the C group.
When was the last time you raised your price target on Alphabet? When was the last time you did that?
I mean, that was 30 days ago.
Okay, so you got it at 320. The stock's had this incredible run. Do you think you're giving enough credit to the TPUs versus the GPUs of Nvidia and the apparent advancements that Alphabet has made in this arms race battle, whatever you want to call it, with Nvidia?
Yeah, I mean, we've said 400's bull case because not just because of TPUs, but we sense a major change that's happening at Google. I mean, you see, they're on the offensive side versus defensive. Ever since the DOJ win, I think now they're going to be in a situation where Apple is going to be a big deal that they're going to get done in terms on the AI front. And I think what you're starting to see now is Nvidia demand the supply is 12 to 1. So when it comes to Meta and some of the TPU that we saw, there's not enough chips to go around yet. So when I look at...
When does the yet become a problem for Nvidia?
I think that's not till late next year, maybe early 2027 in terms of the yet being a problem. And that's why to me, when I look at Alphabet, I mean, me and you have talked about that for a long time. You go to the beginning of this year, I mean, New York City cab driver was bearish on that name. Mm-hmm. It's had a huge prove me. And I'd say a similar thing, maybe even where I say Apple is, right? I mean, Apple all-time high, but I think investors are not giving it the credit to now the AI revolution as that comes on the consumer side, and they ink that deal with Alphabet, and that's going to be a game changer.
What's up with Apple? What is going on in Cupertino? Within the last week, announced departures, at least 4 executives. Mm-hmm. And now you had one of them, another one, refuting the fact that he was thinking about leaving today, too. What's going on in Cupertino?
Look, me and you were in Cupertino WWDC, and I felt like Michael J. Fox Back to the Future, right? Like, the point is, like, they didn't announce anything. AI was invisible, and I think Cook, and I expect him to be CEO through at least 2027, he's recognizing his legacy, the ending of his legacy, which has been Hall of Fame moment, will be AI.
So these are representative of you haven't produced, you're out. You haven't produced, you're out. You haven't produced, you're out. And you haven't produced, you're out from an AI perspective, because Dan Ives keeps talking about the fact that we keep dropping the ball and we're behind everybody else.
Yeah, I would say it's just within Apple Park, there's been a lot of promises. And at the end of the day, you haven't seen the results come through in terms of technology. Now that the DOJ, that win with Google, that's going to open up the key for a partnership here. But look, this AI party, Cook and Cupertino, they're looking at it from the outside through the windows. Every other big tech company is in the inside, right? And we've seen it. So I think this is also recognition, everything Microsoft's done, what Oracle, what other big tech companies. I think Cook finally, clock struck midnight, and he recognized culturally, you're not going to do an acquisition, you need new blood to come in there.
All right, we'll see. I always like the conversation, Dan. Thanks for being here. It's Dan Ives.
Hello, everybody. Welcome to Blue Cloud Trading. This is the segment of the video where we will review the stocks they just talked about on the halftime report and on closing bell. We're going to look at the technicals. We're going to use the Ichimoku indicator. We're going to get into that in a second. You can see the list of stocks over here on the left-hand side that I'm going to review. There's about 13, and I've reviewed them already, so I can tell you which ones are looking the strongest. We're going to look at the index ETFs. We're going to look at the Mag 7s. Some of them, not all of them, like Tesla, Apple, Meta, Microsoft, Amazon. We're going to look at some of the strongest sectors. And we also have 3 ticker symbols here from our members that I'm going to look at as well. All right, let's first start off, though, by taking a look at how the market performed today. And you can see that pretty much the indices were down for the most part, except for the Russell, up slightly, 0.04. The Dow was down 0.45%. NASDAQ down 0.14%. S&P 500 down 0.35%. Why is that? Well, stocks dip ahead of the Fed rate decision, right? As the traders are locking in some of the profits. Some of the other news here, after hours, futures rose after President Trump approved Nvidia H200 AI chip exports to select China customers, boosting Nvidia over 2%. Treasury yields climbed amid concerns about the Fed's 2026 outlook and central bank independence. And some of the stocks, for example, like Netflix declined, Warner Brothers Discovery surged on renewed Paramount Skydance acquisition interest. Confluent, the stock Confluent soared 29% on IBM acquisition rumors, while Carvana rallied after the S&P 500 inclusion. And Broadcom advanced on continued AI optimism, no major economic data released, and keeping Fed anticipation in focus. All right, so let's look at the heat map here also real quick. The strongest stocks here were mostly in the technology sector in the S&P 500. Microsoft, Nvidia, Broadcom, all up. Micron was up 4.09%. Oracle was up 1.36%. But consumer cyclical like Amazon, Tesla down. Google, Meta were down. Healthcare stocks didn't do particularly well. Berkshire was down 1.41%. Utilities were down. Basic materials. It looks like industrials did okay. So let's look at the groups here as well. Yeah. So if we zoom in a little bit, we can see now this takes a much grander percentage of stocks here. And the technology stocks in general were up 0.91%. And industrials followed that by minus 0.28%. And then communication services was down the most, 1.51%. All right, let's get into the stocks now. We want to look to see how the S&P 500 performed. Like I said, down 0.30%. We're hitting some levels of resistance at the 689.70 level. That happened on Friday. You can see how price came up to that level and was unsuccessful in breaking that at 689.70. And so here we are. We're just kind of like hovering in this area. We are using something, for those of you who are new to this channel, we're using something called the Ichimoku indicator. I just want to show you guys very briefly what this is. So here are the price candlesticks. Okay, each one of these candles represents the price over a period of time. We're looking at a weekly chart right now. So each week, okay, you can see that right there. The price is that highlighted in that little box, 683.63 right now for the S&P 500. And then you've got the following moving averages, which comprise the Ichimoku indicator. Okay, we've got Tenkan-sen. That's the 9-period midpoint of the last 9 periods. Okay, so think of each of these last 9 candles here, and it takes the absolute midpoint, takes the high, the low of the candle, divides it by 2, and that's how it is derived. Okay, and then it plots it right there. And then you've got the Kijun-sen. That's that red line there. That's the high and the low of the last, divided by 2. So it's the midpoint of the last 26 periods. So it's a slower moving average. Then you've got Senku Span A, which is that light colored blue line, part of the Ichimoku cloud itself, which is derived by taking the midpoint of the 2 moving averages, projecting it 26 periods into the future. That's where you'll find it. And then the Senku Span B, which is the midpoint of the last 52 periods, but unlike being plotted under the candle, it's actually plotted into the future, 26 periods into the future, basically creating the cloud. And what's interesting about this indicator is the fact that we can, the cloud is supposed to give us some guidance. Okay, when we've got the Senku Span A above the Senku Span B, and it's, like a thick cloud like you're seeing right here, that's a very bullish, strong trend. And you can see it obviously right here in the price movement itself. I mean, there's no denying that, right? The S&P 500 has been moving up steadily. We had a little bit of a hiccup over here, but then we've reestablished where we're back above the moving averages. Right now, we're kind of stuck though in this little range, right? We're under the prior highs from a few months ago. Like that date right there was October 31st. The other thing I forgot to mention here is the Chiku span. That's the lagging line. That's basically, in this case, we're looking at a weekly chart. So 26 weeks into the past, that's the closing price there. If you go back 26 weeks, that's where you'll find the Chiku span. It's the closing price in a line form. And you want to see where that line is in relation to the candle 26 periods ago. If it's above it, like it is in this case, that's bullish. It's as simple as that. It looks more complicated than it is. We just need price to be above these moving averages. We want price to be above the cloud. We want price to be, obviously it makes sense. We want it to be above the 200-day moving average, that dotted yellow line there. And if we have that, we're in a good space, basically. The other indicator I like to use is the directional movement index. We want the green line above the red line. And ideally, you want to see that white line moving up when the green line is above the red line. What you don't want is a situation where the red line, like you see right here in the past, crosses the green line, starts moving up, and the white line starts moving up as well. So the ADX9, that white line that you see right there, represents momentum. And so when you've got that scenario happening and you go straight up, you can see what happens to price. It gives us a warning, which is kind of cool. A nice early warning system. Think of it like that. Hey, things are starting to slow down here. The momentum is starting to increase to the downside. And boom, you can see that drop. And if we measure that move right there, and we just measure it from that high to that low, that's a 20.2% drop in 1.6 months. All right. Between February 21st 2025 and February 11th. Very interesting, right? So how do we know when when the momentum is starting to come out again? Well, basically, we look to see what's happening with the ADX. All right, here it's going straight up. And think of it like a rocket that's moving up. Eventually, it runs out of fuel. And that's what happens, right? And you start seeing the ADX, instead of going straight up, it's now moving sideways. And then what happens? The rocket starts to drop, doesn't it? It starts to, instead of ascending, starts descending. And then when that happens and the red line is above the green line, that's actually a very good positive signal. Because like if we go straight up here, for example, you can see how we also broke through that cloud there, and it led to a nice, beautiful trend that we've been experiencing this whole entire time since we broke through the cloud on May 2nd, 2025, right? We're up over 20% right now. So this is how you can avoid, entering positions, right? In the most, you want the advantages when you're above the cloud, obviously, and you don't want to be adding positions when price is under the cloud. You're in bearish territory in that scenario. Like back here in 2022, you can see how from these highs to that low right there, that was a 24% drop in 10.4 months. If you waited this whole scenario out, maybe you invested in something that was moving up, maybe an individual stock versus the S&P 500. That's all I'm saying. Okay. So let's get into these now. You have a general understanding of the Ichimoku and the directional movement index. And I also like to use the volume to help us just get a little bit more of an insight about how much trading is happening each day, right? So in this case, this is a daily chart. All right, we had about 54.7 million shares traded. Nothing major here. For the SPY, that is. For most stocks, that would be quite a high number. All right, anyway, it's just moving sideways right now. Nothing to do here. The Qs, and let me throw some support levels real quick, folks. Boom. So there's a support of 652.84 based on these lows here. You can see how it stalled right there. Bounced. We've been in a range here for a little bit. We need to get, basically what we need to do essentially is break through that 689.70 level based on that prior high so that we can see the market continuing to the upside. Right now we're just in a consolidation situation here. The QQQ ETF also dropped. It's been moving up slightly here, but we're down 0.19%. We have a red spinning top. It's not something I would be too overly concerned about because we're just moving sideways here, and it's not like, I would just wait it out until we find out what happens with the Fed. Here we have the Dow Jones dropping 0.39%. These aren't big drops at all. Also dropping a little bit, but all the elements of the indicator itself, the Ichimoku, is still very bullish. Again, we want that single span A above single span B. We want the green line, the 9 period, above the 26, the red. We want price above the moving averages in the cloud, and we want Chiku span, the white line, to be above the candle. In this case, it's not above the candle itself, but it's above the closing price, which is still bullish. All right, there's the closing price on that one. What about Russell? The Russell 2000. Interesting, right? So what did it do? It came right to my level, folks, of resistance that I talked about in prior videos based on this doji candle. A doji is a reversal candle. It's a unique candle because it shows the opening and closing price at the same exact level. Price drops, price moves up. That's the wick representing that, right? The wick shows the high of the day. In this case, it's a daily candle, the low of the day, and then this is where it finally closed. And then what happened? The very next day with this doji type candle, price dropped, moved up a little bit, came right back to that exact level, close to it at least, and dropped a whole bunch before coming back up, retesting that 252.77 level on Thursday. That was Thursday's candle right there. Okay, December 4th. Friday's candle, December 5th. And look, it retested it once again, right? Because what happened was, from this level, price gapped. Oops, wrong thingy there. Hold on one second. Let me get rid of that little arrow. Price actually gapped up in the morning and dropped. How do I know that? Because that's what the candles are telling us. I can look at this on a 5-minute chart and show you what I'm talking about. So today, for example, there we are on the 8th. Price gapped up, and dropped throughout the day, right? It reached that level. That dotted green line is the opening price, and it dropped. And there's the closing price down here. So it was at the bottom line is we need to break through that 250, 277 level. All right. And here's a weekly chart for you if you want to check that out. All right. Once we do, we'll be hitting all-time highs, and then we're off to the races, in my opinion. FEZ Euro stocks doing the exact same thing. So it's not just the U.S. Index ETFs here that you're noticing. It's also in Europe, right? Because we're all tied together. Basically the economies for the most part are pretty tied. Doesn't really matter anymore. We're living in a one world scenario here. So FEZ also stalling at the 64.36. It needs to break through. Now, FEZ technically needs to break through that 66 level as well. You're wondering why that's colored differently. It's based on a monthly level. So if I switch it to the monthly chart, now each one of these candles represents 1 month. We go back in time, and there's the high, going all the way back to December 31st of 2007. That's right. You heard that correctly. 2007. Okay, there's the years. All right. So there's 2007. If we can break through that level in FEZ, the Euro stock. So this particular ETF has been around for a while. I mean, you can go back all the way to 2002, October. Was it October? Was it? Let's find out. October 31st, 2002. Wow, amazing. And you can see how it's been moving around throughout this whole entire time. Now, if we can break through these levels, we're going to see a great move up. If we stall at $66, however, we stall when we get to that level, and we start seeing a drop, that's also a possibility. All right, then we've got a double top scenario which is very bearish. So that's why it's important to observe the charts, because they're going to give us some insight about what we should be doing and what we shouldn't be doing, essentially. And so that puts us in an advantage, doesn't it, over the majority of the population that's not really utilizing this type of technical analysis, if you think about it. All right, here's the VIX. The VIX, it spiked a little bit. It was up 8.11%. Now, the VIX represents market volatility. It represents fear in the markets. And so we've been dropping, as you can see here. But boom, it actually gapped up this morning on Monday. Okay, December 8th, as you can see right there. And it's starting to move back up again. There's a little bit of fear because there's the unknown. Whenever there's the unknown and the Fed can move the markets, as we all know, that's what happens. So that's what's happening right now. If things turn out positive, obviously it's going to continue it's going to drop right back down again. All right, it's like whack-the-mole, Let's look at the stocks that they talked about on CNBC. By the way, before I do that though, I did produce a members-only video this weekend, guys. Now this is where I go over my entire portfolio every weekend. You can see that 2 days ago. Every weekend, I make one of these videos. They're usually around an hour long or so. And I basically share all the trades that I placed throughout the week. Okay. And I explain why I added positions, why I didn't. Very educational. And if you want to get access to these, what you need to do, right next to the subscribe button on my channel, there's a join button. You just need to click on it. Scroll down a little bit here, and you'll see there's 3 different tiers. You've got Blue Cloud Supporter. Okay, and I do appreciate all of you who are supporting this channel to keep it running, keep it going. It's a unique channel. We got to keep, these small channels like mine going. Blue Cloud Trader, and then Blue Cloud Legend. What's the difference? Under Blue Cloud Trader, this is where under this level you'll be able to get access to those videos. Okay, you can also request up to 2 stocks or ETFs be analyzed each month. All right. What's the next level? Blue Cloud Legend. Under this level membership, you get those exclusive member-only videos. 3 stocks or ETFs can be analyzed, okay, per month. I've got some recorded day trading videos, so you can see some of the day trades that I've placed in the past, so you can kind of get a sense of, what kind of strategy or methodology I utilize there. And then the most important part, in my opinion, is the daily trade updates, where I post these. Once you become a member, you'll be able to see the daily trades that I place right next to the posts, once you become a member, there'll be a new tab that pops up. It will say membership. It will look like this right here. And you click on that, and you'll be able to access it. All right. Okay, let's get back. Let's get back now to the stocks that they talked about on the show. Or shows, in this case. Broadcom, AVGO. Now, here's another thing I've done to make things quite simple so that you can quickly identify the strongest ones. I've identified them with a little blue flag over here. Okay, these little blue flags that you see are so what that if a stock gets one of these blue flags, what it means is it's strong on both the weekly chart and on the daily chart, and it's technically sound with the Ichimoku indicator. I've already reviewed them, so I can tell you that they are something from a technical perspective. At least they look great. Okay. So here's Broadcom, for example. And, you've got a future cloud that's bullish. We got price above the moving averages. Chiku Spin is above price on the daily and on the weekly. That's all I'm talking about here. And so I like Broadcom. Is it stalling here? Yes, it is. Is that a spinning top? Yes, it's a red spinning top. It's a negative candle. It could pull back. It stalled right at the high here of the prior high. Okay. So that's why you have to be a little bit concerned. And I probably want to wait a little bit. I wouldn't add a position when I see a candle like this. Why is this a negative candle? Well, let's show you. Another thing that you might want to check out is my Blue Cloud Trader. It's at Blue Cloud Trader. It's on X, okay, on Twitter basically, and from here, if you go to the highlights next to the posts and replies right here, highlights, click on that. Scroll down a little bit. We've got our candle pattern reference sheet. I'll click on it so we can see it clearly. And this shows us a little bit about understanding the candles. You can read that. You can download this yourself for free. There's the bearish spinning top under the bearish single candle patterns. A negative one. All right. I recommend that you try to memorize as many of these as you possibly can. It will make your trading a lot easier, and you'll have a better sense of what's going on. If you see one of these at the top of a move after it's moved up, like you see right there, if you see that's negative. If you see the same looking type candle at the bottom after it's dropped, the price has dropped a bit, that's actually bullish. All right. So it's all about the position of where you actually see it. All right, let's get back now. So after it's moved up, this is negative. All right. So just keep that in mind. Over here, where that same spinning top was after it dropped, it actually turned into something bullish, right? CVNA, Carvana, you heard about how they popped 12.06%, big jump, broke through this prior high from, when was that? That's from July? Yeah, July 31st. So back in July, you can see it reached that level. That's a shooting star, also a reversal pattern. So after a move up, you get one of these long wick type candles, right? Again, let me show you what that looks like. It's called the shooting star. There it is. Okay. Very negative. There's the gravestone doji. That also is negative too. So when you get that, expect nothing positive, generally speaking. Not always, but I'm just saying the majority of the time. There's a higher probability that it's going to drop. And that's what happened here. In fact, from that level, it dropped approximately, 17.2% in 19 days? Do you see the advantage here of using the technicals? All right, and then you have a bullish hammer right there, and that led to a nice jump at about 12.5%, okay? All right, and now we're above the 413.33. We're hitting all-time highs. Let's look at this on a monthly chart. There's Carvana on the monthly. All right, we'll look at that. There's a shooting star on a monthly chart back in August 31st, 2021. Actually, I didn't expect that to be popping up right there. But this is a good example of what can happen. So if I just move that for a second so I can show you guys, I'm just going to measure from that low down to these lows. All right, you can see it dropped 98.03% in 1.6 years. And it took, multiple years to get back up to these levels. I mean, it's gone up 5,000%, over 5,800%. Again, this is, so you can see how things started to progress. Price started to stabilize, right? It stopped declining here, right? the ADX, where it was moving up, started dropping right around this area, like we talked about, and stabilized. The green line crossed above the red line right about that level. Okay. All right. And then what happened? It moved sideways a little bit. The ADX was still dropping, so it was just moving sideways for a bit, creating a base. All right. Then we've got the white line here, the ADX9. Okay, right there. It goes straight up. Boom. And that big expansion. It did go sideways here temporarily. You can see that little base that it built. And then it continued moving up again. So this strategy works on the monthly. It works on the weekly. It works on a 5-minute chart. It doesn't really matter what time frame. It's all about what time frame you want to trade. Here's a 1-minute chart at the end of the day today. This was Carvana at the end of the day. But it was a big jump all morning. You had the big gap up, that big move. Profit taking started taking place around, I'd say 2:30 p.m. or so. All right, you can see that series of lower highs and lower lows in Carvana. And one cool thing about this software that I'm using right now, it's called TC2000, is I can also check to see what it looks like after hours. So let's click on the little button here, include post market. And so this grayed out area that you see right here is what's happening after hours. It's really not moving much. So it's it's up 11.84% after hours versus 12.06. It hasn't really moved much after hours. Okay, let's continue. Sometimes I get sidetracked. I like to explain things a little bit more clearly. There are a lot of new people, and I think it's useful to learn some of this stuff. All right, GPIQ is an ETF they talked about. Goldman Sachs NASDAQ 100 Core Premium Income ETF, down 0.17%. But I like this one because you can see the cloud itself is turning bullish. The single span A is crossing right now above the single span B. Price is above the cloud. Tenkan-sen is crossing above the Kijun-sen. The only thing that's lacking here is the lagging line has not crossed above price. So the majority of the elements of this indicator are positive on the daily chart, and they are also on the weekly, which is important. Goldman Sachs, look at this one on the weekly chart, popping through that 841.28. That was last week on Friday. We talked about that on Friday. Goldman Sachs was talked about in the video that I did on Friday. So it popped through that 841.28. Look at it. It's continuing to move up. That's what we want to see. We want to see a continuation to the upside after a breakout. So it looks good. I like Goldman Sachs. What about the MAGs? The Magnificent 7 ETF. Well, it does get a blue flag because price is above the cloud. We have everything, all the elements correct, except for Chiku span. On the daily, on the weekly chart, it looks pretty good. I like it. SOXX is the semiconductor sector ETF. That one looks good too on the weekly chart. All right, it seems to be stalling right there at that high though. And then daily chart. All right, so we want to see price break through that level. It's stalling right at that prior high, so I'd be cautious here. I would not be adding until it breaks through. I'd like to see high volume as well on the breakout. What I mean by that is you can see this volume bar here is above that white line. That's the 50-day moving average. Right now, you can see how the volume below has been very kind of like, lackluster, I'd call it. It's just side. It's not really moving. It's not. So if you get a nice green candle popping above that 50, that could lead to a nice, and it breaks through that level that I'm talking about right there. That's going to be very bullish. Okay, the rest of these folks, that's just, so that's 6 stocks out of 13 that are bullish, in my opinion. The rest of these is something off, and I wouldn't consider them at all. ASND, for example, right now at this particular time, its price is in between the two moving averages, all right, on the daily and on the weekly chart. It does look very bullish. I will say that. So it can certainly break through. If it breaks above the 9 period, you'll have a buy signal. Do you want to buy this stock though? That's going to be your call. Looking at the fundamentals, like the profit margin, it is negative 36.03. Operating cash flow is also negative here. Just keep that in mind. But look at that sales growth rate, 165.21% over the last 5 years. That's pretty wild. Okay. Berkshire dropped 1.41%, but it created a hammer-like candle. This is a bullish candle. Even though it's red, What the wick represents today is it came down to the cloud, found support, which is exactly what you want to see, and then the buyers stepped in right at the cloud, didn't they? And they pushed the price back up. Price closed right there. That's the body of the candle. There's the opening. There's the close. It did still close under that 200, but it did move up. I think that there's a higher probability that if we have a bullish day tomorrow, that Berkshire will continue. Berkshire will break through that Tenkan-sen and continue moving up. All right. Again, that's a hammer, they call that. And looking at our candle pattern reference sheet under single candle patterns, there's the hammer right there. All right, let's get back. Let's look at IYC. And let me look at Berkshire on the weekly. Just curious on what it looks like. All right, so on the weekly chart, Berkshire is inside the cloud. So just keep that, ideally what you're looking for is a stock or ETF to be bullish technically with the Ichimoku on both time frames. And you personally, I wouldn't add a position as long as it remains inside the cloud on the weekly chart. But that's just me. All right, let's keep going. IYC, Dow Jones Consumer Services Sector, down 0.89% on the weekly. Here's the daily chart under the cloud right now. Let's stay out of that one. MPWR, Monolithic Power Systems, is inside the cloud and developed a shooting star, which is a negative candle. Even though it's a bullish day, up 2.11%, I would not be adding here, obviously. We also have a bearish cloud on the daily chart, and on the weekly chart, we are breaking above that Tenkan-sen, which is good, but we won't know what this candle looks like until Friday of this week. Because remember, on the weekly chart, we just started, right? This is Monday. This candle is still forming. MSTR, they talked about MicroStrategy, or as they call it, Strategy Inc. now. It used to be called MicroStrategy. It is finding some support at the 200-day moving average. You can see that on the weekly chart. It's stabilizing, so that's a good sign. But the ADX is still moving up. Okay, so don't be too, we might be getting fooled by that. Here's a daily chart. It's stabilizing a little bit. On the daily chart, you can see, the ADX where it was moving up is starting to decline now. So it has potential. I'll just say that. It has potential now at this point to actually start moving up. Would I be adding here? No. Netflix, still declining. No on Netflix, okay? Under the chart, under the cloud on the daily, inside the cloud on the weekly. So no on that one. Uber is also under the cloud, but it has been moving up quite a bit here recently in recent days on the weekly chart, breaking back above the moving averages. But again, it's still in a decline here. We've got a series of lower highs and lower lows. There's a lower high here from this one. Okay, so you can see that decline right there. And then we still haven't taken out any highs. We would at least have to take out this prior high right here. And we have not done that. Okay, and that's those are the stocks talked about on the show. Now we're going to look at the some of the Mag 7s. Tesla dropped today, down 3.39% after that little spinning top type candle back into the cloud. It lost its blue flag status because of that, because it's inside the cloud. Apple also lost its status on Friday when it closed under the Tenkan-sen. It's now still in between the two moving averages here. There's the weekly chart. Looks still very bullish on weekly. Again, all we need is one positive news day, and this thing will continue moving up. But right now, I would hold off on adding at this particular moment. Meta is also stalling at that 200. Under the cloud, no on Meta. Microsoft is under the cloud, no on Microsoft. Even though it is showing a little bit of strength, we do in fact have a higher low from the prior one. That's a good sign, but we haven't taken out this high. So we're kind of stuck right now. If we can break through that, then you'll at least have an ascending triangle pattern, which is a bullish pattern. Okay? And that pattern you can find also in this, right below this, if you, on my Twitter page, there's another little pattern cheat sheet here. There's the ascending triangle, okay, which is a bullish, that's the bullish variant right there. All right, let's keep going. Amazon is under the moving averages, but above the cloud. So no on this one currently. We also developed a, you can see how prices have been dropping. All right, let's look at the strongest sectors only. We're not going to go into all of these because there's about 20 in here. XBI is biotech. That one's up 0.20%. It dropped a little bit. It gapped up and dropped, but it still stayed above the prior days, Friday's closing price. That's why it's up 0.2%. And there's the weekly chart, still very bullish overall. Energy still above on the weekly chart, above the cloud, and on the daily looking good, even though it did stall. It was down 1.09%. There's that shooting star that we're talking about, but it stalled. So this is a support level, the 9 period. Once it reaches it, it typically stalls. Look at that right here. Okay. COPX on the daily chart is above this breaking candle, that 6620 level. I like that, but it's pulling back a little, down 0.84%. Here's the weekly chart. This is what it looks like. XLC breaking above on the weekly chart for a third week. We're still above that. The moving averages in the cloud. On the daily chart, we dropped 0.74. That was communication services, had a big drop today, but it stopped. So this is how you can tell about the health of the stock or ETF, whatever you're looking at. You don't just pay attention to the percentages here. The drops, those don't mean as much to me as the actual image because this represents where the stock is actually heading, right? The fact that we have a future bullish cloud here, we can see that it broke through levels of resistance, the cloud itself. Now, the only thing I think is with XLC is it does need to break above this high here. So if you want to take it to the next level, you want to look to see right there the high of that candle, which is 117.24. All right, and I'll just circle it so you can see what I'm talking about. This candle right here, that's the prior high. If we can close above it with high volume, that would be positive. We were unsuccessful today. We basically got above that 117.24. It was a tease because the second price got above, it immediately started getting sold off, and you can see that on a 5-minute chart. Right, so here we are on the 8th. It reached that level up there, immediately started getting sold off here. Whoops, let me get the little arrow here. So there's the opening price, that dotted green line. It dropped and kept on dropping. And notice, this is a beautiful example on a 5-minute chart of how you can utilize the Ichimoku as well. Notice how price was withheld within, right under that 9 period for, look at that. Do you see how effective it was? Pretty amazing. What happened when it broke through it? People started buying it up. So there's some validity, I think, to this indicator. SMH, let's look at this on the daily. Okay, so here we are. We're getting close to the 372 level. That's basically where we're at. I mean, we're at close to a resistance level. How far are we from there? We're just about 1.09% away. So there's nothing to do here except for wait it out and see what happens. Wait for the news. You know, the ADX, the positive thing is that the ADX is moving up. The green line is above the red line. All right, that's good. But we're so close to resistance, I would not be adding a position here. We're also far away from the moving averages. GLD doing okay, even though it's down 0.26%. It held its own above that 9 period. That's a good sign. I like it. There's the weekly chart. Silver on the weekly chart, down 0.45%. Okay, and then here's the daily chart. And so it's going sideways. It's building a nice, beautiful base right there. It's taking a breather from this move up. And if it can break through that level and close above it, then we'll see it move up. So I'm not going to get into the rest of these because, like I said, I've already reviewed them. There's something technically wrong with those right now at this particular moment, and there's no reason to get into them at this point. I mean, XLK, I can tell you, like, that's the technology ETF. You would think that this was looking still quite positive, but here's the daily chart. You can see that yes, it's been moving up quite nicely here for a little bit, but the cloud itself is still bearish. The Tenkan-sen is about to cross the Kijun-sen, and Chikou-span is still underpriced. There's too many things that are still not playing out quite right yet. Let's not forget that we did break through this low here. We broke the structure of the trend, the uptrend. What I mean by that is we want to see price always, okay, hitting new highs and higher highs and higher lows, like this low here. All right, this low is higher than the prior one. This high here is higher than this one. This low is higher than this low, and it's just stair-stepping its way up. The second that you step downwards, where we take out a low, it breaks it. It breaks the trend, and now you have to be suspicious. Because what if, okay, price starts to drop? Now all of a sudden, not only do you have a lower low here, but you're also going to have a lower high, right? And then what you will have essentially in that scenario is a downward channel. That's correct, and that's not a good thing either. What's a downward channel? Let me show you. It's right here. It's got to be in here somewhere. Oh, it's not one of the patterns? I'm shocked. Wait. No, it's not in here. We don't have a downward channel in here. But I can assure you that the downward channel is a negative place to be in. We want to be in upward channels, and here's an upward channel for you right here. Okay? That's an upward channel. Notice how it was also broken right there on the diagonal trend line. So just keep that in mind. All right? Okay. Oh yeah, we're going to talk about, let me do the members request real quick. TE, this is T1 Energy Inc. The ticker symbol is TE. It's in the technology sector, electronic components. Let's look at the weekly chart. It broke through that 200-day. I want you guys to also notice the amount of volume that's coming into this one. Quite a bit of volume. A lot of interest is what that basically means. There's a lot more interest in this stock. Why? It broke through the cloud. If you go downwards, you'll notice how it coincides with these volume bars, doesn't it? And now the interest is starting to come in. Why? Because back here, what was going on was what's called the accumulation stage, where the big money is starting to slowly putting the brakes on this stock dropping any further below these lows, essentially, and they're stabilizing. And sometimes it takes a stock multiple weeks and sometimes years. Here we are in 2024, the end of 2023, going all the way into 2025. And then we finally got basically, now all of a sudden, there's a dynamic that's changing here with this stock. And you can see that it took out that high right there. This high was taken out, right? And there it is. It's just now moving upwards, and it broke through that 200. It's an inexpensive stock at $6.02. When I say inexpensive, it's like a lower priced stock, but that's because, I mean, we can do a little further we can get some more further information about this, because I'm not too familiar with TE. It's not something that that I've talked about before. So let's look at this one. Let's look it up very quickly. Here in FinViz, I'll type in TE. And let me minimize that a little bit so we can get some info. So looking at this here, you can see that the earnings announcements have not particularly been great, but there is a lot of interest. Maybe things are improving. So here we had a surprise of negative 11.92% in revenue. Here, a 61.5% surprise of negative EPS. What about revenue? Okay, so the surprise here on the revenue was negative 5.09 versus 11.92. So that's a smaller decline as far as the percentage of revenue. Okay, so that actually was an improvement. All right, so that's, and then what about over here on this is for November 14th. So there you have some more. Notice what's going on now with this company. The revenue has started to become, okay, you can see the surprise is positive 1.77%. The estimate was 206.842 mil, and they actually reported 210.522. So that is what, in my opinion, is bringing some interest into this particular stock. Now, if we scroll down further, what can we learn about this company? Well, there's just 328 employees. And what else can we learn about this company? We can find out the market cap is $1.28 billion. All right. And then what else can we learn? We can see that the year to date, it's up 133.33%. Average volume is 9.19. The sales, they don't really have that much information here. Profit margins are negative 139.61. Shares outstanding are increasing. That's not generally a good sign, but let's look at the statement real quick. Scroll down a little bit. And if we look at the net margin, there's a net margin. Now is that quarterly? That's quarterly. Let's look at the annual. Okay, so there's not really that much information here. Cash flow is improving, so that's good on the annual. What about quarterly? Free cash flow. Oh, okay. See that? So they get some free cash flow that's increasing here. So that's a good sign. All right. Just a quick little review of the T1 Energy Inc. What do they do? I'm not familiar with this company at all. Let's find out together. Advanced American solar and battery manufacturing. Okay. Well, that makes sense why it would start to like pick up, especially since we're putting some crazy tariffs on China's solar panels and that sort of thing. So an American company is going to do much better in this environment right now. It's building domestic solar and battery supply chains to invigorate America with scalable, reliable, and low-cost energy. G1 Dallas, G2 Austin, durable solar components. Okay, interesting. Alrighty, let's get back. I like to like I said, I like to check things out. We're doing this together. This is kind of like an educational. This is sort of how I do some of my research, I guess you could say. QNCCF, Quantum Emotion Corporation. On the weekly chart, it's had a nice big run here. Now this, let's see. So let me see when these guys went public. They went public back here around 2000, 2018 or so, and they're up 1,542% since that time frame, and they started really spiking here in 2025. We're looking again on a monthly chart. It's really gathering a lot of interest. It went from, you can see there, 1.01 or 1.1 up to, 3.35 or whatever. The monthly chart looks pretty good. The weekly chart, it's kind of stagnant in between the two moving averages right now. The daily chart, we're stuck inside the cloud, so it's not a buy signal here. It's probably more of I'd say more of a hold. If you happen to have a position in this, I'd be holding here probably. It's neither a selling scenario or a time to buy. You're because price is in fact moving up here in the short term on the daily chart. If we switch it to a 4-hour, you can see that right there. After that pullback, there's a big drop though. Let's see, how big was that? It's a 56% drop in 21 days. Very volatile. Not something that I personally would be considering. Okay, it's a little too volatile for me. So there's your technical analysis on that one. Let's take a look at BTQ. Let's look at the weekly chart on this one. This one is currently under the cloud. There's a long shooting star on the weekly there. Let's look at the daily. It's under the cloud in the daily chart. From these highs here, it has dropped also approximately 58% or so. Very volatile. Very volatile. So I don't know. There's no. I'm not here to give guidance as far as whether you should be. I certainly would not be adding a position here, for sure. Okay, you want to wait for this thing to break through the cloud, obviously, and it's just recognize that it's going to be. This is a penny stock type situation here. Well, it's not a penny stock exactly. It's $6.51 per share. But they move so much, okay? Profit margins, negative 2,378. Why don't we look at this one too? I'm just curious. BTQ. Let's take a quick look and find out a little bit about this company too. BTQ. Technologies. Okay. So, their last earnings back here, they had a negative revenue surprise of 62.2% here. Also down a revenue of negative 0.55%. Looking down below, we can see employees. There's no information here about number of employees. Market cap is $924 million. Year to date, it's up 140%. There's just not enough information here. And what do these folks do? Accelerating quantum advantage. Solutions for both defensive and offensive capabilities to give your business an edge in the quantum age. It's over my head, I'll tell you that. All right, interesting. Okay, guys, that's gonna that's gonna do it for this video. I appreciate you watching. Don't forget to hit the like, subscribe button if you're liking what you're seeing here, and check out my channel, on YouTube. If you want to check out some of the additional links that I have here, okay, click on the 9 more links right there. Read a little bit about my channel. Scroll down. There's some great links here as well. Okay, there's the Twitter page, for example. There's my Patreon channel. I've got a $25 coupon for the TC2000 software. Maybe you too want to have this software that I'm using to help me analyze my charts, right? You can set it up to look exactly like mine. I've included a link in those links there, so you can do that. You add your email here. You can download the software. Here's the pricing info. And then, by the way, you get a $25 coupon. Okay, just so you know. You receive a $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading. This is an affiliate link. So you do need to click on that link to get that $25 coupon. Now, here's a cool thing. After you've become a, after you start using the TC2000 software itself, if you decide to also use their brokerage firm, their brokerage account, why trade through TC2000, which is connected to Interactive Brokers as well, by the way. They do a lot of, all the processing goes through them. If you end up using it, then you continue to get a $25 coupon month after month, as long as you keep a certain balance in your account. You can find out the details about that. But here's the pricing info. All right, and if you do monthly, it's $25 per month. So at least you can get that first month for free with my coupon. And then you could keep getting that free every month. Again, if you do that, if you also use their brokerage account. And I think you have to do at least 1 trade per month, which is minimum, okay, like something like that. They also have the Premium and the Premium Plus. I do use the Premium Plus. All right, but that might be over too much. Personally, I would recommend the Premium if you want to really be able to do some drawing on the charts like I do. If you want to set up alerts, if you want to use their Easy Scan wizard, there's the drawing tools right there, right? So you can drag between any 2 points on your chart and preview with a large toolbox and shapes and indicators. There's the morning pre-buzz. Get a start on stocks with unusual pre-market trading activity before the regular session opens. Most watched and trending stocks. Real-time scanning and sorting. You can also do that, which is cool. And then under the premium level, okay, these are the additional things that you get. The real-time market pulse gauges and pulse indicators and filters and all the sorts of cool things. And then there's some more information. So if you want to add alerts, you can do that. Okay, and that's it, guys. It's a long video, but I hope you enjoyed it. Hope you all had a great weekend. Let's hope for a good trading day tomorrow. I will catch you all in the next one.